Hey everybody, hope you had a good week. Markets were mixed for the week. We had an action-packed week with the reports on Thursday. December 22 corn was up 17 cents, and November 22 beans were down 88 cents on the week. Soybeans closed at 14.05 today on Friday. Large volume caused price to melt through support levels after the report came out on Thursday. Currently, we are closed at a good support level from early February at $14 on beans. So to get bullish in the short term, though, we will need to recapture that 50-day moving average, which is right at 1436. Money flows are extremely oversold. Managed money is probably starting to build a long position here at good support levels, as they did have to take profits before quarter end rebalancing as well. Would not really consider panic selling right now at all. Do not panic. We are very oversold at support levels, so let this contract consolidate some here at support before making any new sales. Managed money is net long 156,000 contracts through this past Tuesday. They sold roughly 18,000 this past week. Corn closed the week at $6.86. We did make a new high today at 693. So very bullish volume after that report on Thursday. Um, could easily test $7 next week or in the next few trading days. We did break out of some negative weakness in the strength indicators, and so now we do have some room to run higher on those indicators. We bounced off of $6.36 in the week. Money flows turned up nicely, and they have plenty of room to run as well. So the corn chart is looking very bullish, especially with the fundamental reasons behind it. We are trading above all major moving averages, and the initial support would be at the 9-day moving average at almost $6.70. It really is hard not to make some initial new crop sales at these prices. Um, if we get to $7, you really don't see that too often. Almost 10 years ago is probably the last time on new crop. Managed money came out on Tuesday, net long 354,000 contracts. They sold about 30,000 contracts this past week. Managed money did want to eliminate some exposure before this large report came out and take some chips off the table. General updates. Again, commodities sold off early in the week. They due to new lockdowns from COVID in China, and also because peace talks were reportedly progressing in Ukraine and Russia. But it really is hard to believe the war is over, and that's why commodities rallied back on Wednesday. Managed money took profits before Thursday's report and quarter end, so they are doing some quarter end rebalancing. The Ukrainian farmer probably has a better chance of planting a crop right now if Russia does back off, but there still is really major concerns over exports, and it's probably going to be close to impossible to export out of the Black Sea, given how long it's going to take to replace all that infrastructure. South American second crop corn is looking really good. So if you do have some old crop corn left, really would recommend you potentially getting rid of that if you're sitting on it still, because that could put a cap on the price potential for that contract. Quarterly stocks report came out on Thursday. It was within trade expectations, so really didn't get much of a market mover on that report. But what really caused the market to move huge on Thursday was a planting intentions report. And we had some big surprises in intended acres. Corn and soybean acres were combined, estimated at 180.5 million acres, which was down 100,000 from last year. 91 million soybean acres were estimated. The trade were estimating 88.7 million acres of soybeans. So that was a very bearish number. It would be a record high, but very unlikely that it actually does end up being that much when we do get to June and that acreage report comes out. Would not be surprised if some acres did switch to corn based off of that number and the price reaction. Corn acres came in at 89.5 million compared to estimates of 92 million. That would actually be the lowest amount of corn acres in 5 years. So really expect some more acres to be planted in corn this year. Um, Obviously the corn contract surged higher while soybeans sold off sharply. With high prices and acres not expanding at all, actually shrinking, that really puts a ton of pressure on the U.S. to grow a record crop to keep up with world demand. A lot of acres also switched to cotton down south, as that contract is also at a 10-year high. So incentive for farmers in the Delta area to plant cotton this year. In regards to crop insurance, the early plant date for corn is April 5th, but it's looking like that might not happen this year. We could be having some weather delays as it's been pretty cold, and I think there is some rain in the forecast for a few days next week. Deadline to report production is April 29th. We can also update prior year's production if you have any updates to make as well. And lastly, we are on the radio now for the Edge Market Minute on WHPO 100.9 FM and WIQI, which is 95.9 FM, Monday through Friday at 7 o'clock and 7:30. So if you want to hear our updates each day, we are on those radio stations. But we want to thank you for your business. Hope you have a great weekend. If you have any questions, please feel free to reach out and call us. Thank you.